Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal drafted. The U.S. and Iran prepare to sign an interim peace deal, which would see Iran scoring broad financial gains, including tapping a $300 billion development fund and eventually unlocking frozen assets. Oil holds near a 3-month low on expectations a U.S.-Iran deal to reopen the Strait of Hormuz will unleash a wave of supply. And Asian stocks under pressure as the chip rally on Wall Street pauses, and traders look ahead to Kevin Warsh's first meeting as Fed chair. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Amar in Dubai. A bit of a different start to the show this morning when looking at our market check, and that is because, look at this, SpaceX, 49% gain since its debut. We started the stock price at around 135. We're over 200 at this point. Now, the company has topped Amazon as the 5th largest stock in the world. During the intraday performance, it actually topped Microsoft briefly, but ended up being the 5th largest stock in the world. It's now at $2.65 trillion in market cap. That is about $8 billion above Amazon. But now we're still talking about a company that is not generating as much revenue as some of the mega cap peers in the S&P 500. Its revenue in 2025 was at around 18.7 billion. Now, how that compares to Amazon is 717 billion for Amazon in that year. But perhaps the most staggering line in all of this is a lead from one of our stories about Elon Musk's wealth. And it says that it took him 54 years to make his first trillion. Now, 2 days into the debut, or now we're 3 days into the debut of SpaceX, with this performance, he's nearly a third of his way into his next $1 trillion. So a staggering number there on Elon Musk's wealth and the staggering performance of SpaceX generally. Now, let's take a look at the broader sentiment in markets this morning. We flip the board and we take a look at U.S. futures, 0.2 higher. The S&P did close in negative territory yesterday. We saw a little bit of a pause when it comes to semiconductors and the tech picture generally. Asian equities sideways. They're moving sideways this morning. They were a little bit lower this morning. The Kospi was wavering just slightly. We'll take a broader look into what Asian equities are doing later on. And then Brent crude prices yet again dropping 0.5% lower, below $80 a barrel for the first time in a while. We're seeing it at the lowest level in 3 months. Expectations of a deal, no deal. We're going to see what happens by the end of this week, and we'll talk more about that on the show later. And then the yield on the 10-year notes in the United States. Everyone is awaiting the Kevin Warsh meeting, his first meeting. The expectation is widely for the Fed to hold, but everyone is waiting for what Warsh says on the first meeting taking place later today. Now, let's check in on how markets in Asia are faring this morning. Avril Hong is in Singapore for us. Avril?
Yeah, Beer, we're seeing Asia's 3-session winning streak running into a bit of a wall today ahead of the Fed. That being said, with oil prices at these levels, the overall rate hike concerns have pulled back, so a good backdrop for stocks overall. You're seeing the Nikkei managing to extend a little from the records that we already saw earlier in the week, and this is thanks in part to the BOJ day passing without incident. Now, the other central bank that we're watching in this part of the world is China's. There is a high-profile meeting of Chinese policymakers on the finance front underway in Shanghai. And typically, this is a way for them to signal policy shifts. And this is coming just a day, of course, after data which showed a consumption slump in China. So far from the PBOC, they seem to be signaling that a shift in the interest rate framework to focus on the overnight policy rate. So we're seeing dollar China looking pretty range-bound. Abir?
Avril Hong in our Singapore bureau with those details. Now let's turn back to the regional story. Iran is set to receive broad financial incentives as part of its agreement with the United States. A draft of the deal shows Tehran will get the right to sell oil immediately, tap $300 billion in a development fund, and eventually access its frozen assets. But President Trump reiterated Iran will never own a nuclear weapon.
Frankly, the only thing that really matters to me is Iran will never have a nuclear weapon. And it says it loud and clear. They're not going to develop it. They're not going to buy it. They're not going to do anything with it. And if they do, they suffer unbelievable consequences. I won't even tell you the consequences, but the consequences are the ultimate consequences. And with that being said, I hope we have a very good relationship. But the biggest thing is they will not have a nuclear weapon.
For more, Honor and Bloomberg's managing editor for the Middle East and North Africa joins me now to discuss the details. Honor, good to have you on set. This MOU, we've got a near final draft of the 14 provisions in it. What more do we know about it?
I think the highlight is the financial gains, as you already pointed out, Abir. Iran has been making it clear since these indirect talks began in about March and April that it wants compensation for what it says was massive war damages suffered since the U.S. and Israel started bombing the Islamic Republic. There are three main parts to the financial compensation that seems to have made its way into the interim deal, or MOU, as you said. One, the most eye-catching number is a $300 billion economic development fund. Now, to be clear, details are very hazy. Not clear what milestones Iran must hit to get that money, but it's clear that the U.S. undertakes to put together a fund along with its regional allies, and the total financing should be at least $300 billion. Massive number, massive gain for Iran, to be sure. The second, and again, equally important bit is the immediate ability to resume oil and petrochemicals and downstream product exports. This is going to be a huge relief for Iran as it struggles from a lack of revenues, FX revenues, since the war began. And the third one, again, equally important, is the lifting of sanctions, a commitment not to impose further sanctions going forward, and releasing of frozen funds, which are thought to be in the tens of billions of dollars. Not a clear timeline, but Iran will eventually get it if they agree to a final deal at the end of the 60-day period after this MOU.
Now, two things that caught my eye when I was looking at the provisions and what they entail. One is that a lot of the clauses could be really open for interpretation on the timeline, what they could indicate and how the two sides will act on them. But then the other thing is there's still a lot of uncertainties on, or how could this all unravel, bearing in mind the Lebanon clause, bearing in mind the nuclear weapon clause?
Well, as you said, there's a lot of uncertainty, and that was by design. That was meant to bring two warring sides to a consensus or a compromise deal in a short period of time. As you said, it leaves a lot of room for trouble, for this deal to collapse, unravel. There are a lot of issues. One, obviously, is the nuclear file. Again, maybe that is not as big a risk as Lebanon is. That, I think, is the single most important bit that we should keep an eye on, because it's clear that the U.S. commits to a cessation of hostilities on all fronts. And it's been clear since the war began that Israel does not feel itself that it needs to commit to a ceasefire in Lebanon as long as Hezbollah exists, which it does. So that is a big source of risk to this deal, along with the other ones that you've already mentioned.
Yeah. We'll wait until the end of the week to see if we get more clarity on those details. As Honor and Bloomberg's managing editor for the Middle East and North Africa. Now, bonds are advancing ahead of the Fed's policy decision due later today. This comes as a slide in oil prices towards a 3-month low helps ease concerns of a renewed inflation shock. Joining us now is Amar Bashir, head of fixed income at Wealthbrix Capital Partners. Amar, thank you for joining us on set this morning. We'll stick with the geopolitical story in light of oil prices below 80. I haven't seen it below 80 for a while now. What does that mean for inflationary pressures, but also the impact on fixed income assets?
Sure. So first on the Iranian and U.S. memorandum of understanding, for the markets and really for global developments, this has, while clearly there's still room for the plan to deteriorate and for a resumption of war, the probability of a resumption of full war has been reduced drastically. And first, that's a welcome development from a humanitarian perspective, but secondly, for the markets, this is a cause for celebration as well. For central bankers that had been facing a stagflationary energy shock, one of the worst conundrums for a central banker, this allows them to breathe a sigh of relief. Obviously, with oil prices declining, that allows for inflation to decline. The pass-through that we had been starting to see can begin to abate. And the central banks that had already been hiking and had been on a hiking path probably have less reason to continue hiking. And the banks that have yet to hike potentially can maybe avoid hiking completely.
So we were talking before the show on what is the bond performance across the world. This morning, we're seeing a rally in Australia. We're seeing a rally in Japanese 10-year notes. This is ahead of the meeting that we're expecting later today by Kevin Warsh, his first meeting as Fed chair. Do you think that the bond rally or the spreads tightening is justified given the news that we've seen out of the Middle East, or is the market getting ahead of itself?
Well, I think it is justified. I would say that even with this rally, you're still pricing about 30 to 35 basis points of rate hikes across the three major central banks. The Fed, the Bank of England, and the ECB all have that about the same amount priced for the next year. We think for the Fed that this may give the new Fed chair some room to avoid hiking. And so we think that that is probably a good area to fade that move. Same in the Bank of England, where the central bank there has been quite vocal about the fact that they had already been pricing cuts before, and now just the fact that those cuts were priced out, that in of itself is a tightening of financial conditions. The only one of the main three central banks is the ECB, who hiked already last week, and they're pure inflation targeting central banks. So for them, it makes sense to hike, and we think likely there will be an additional hike potentially in September. So there, we think the market pricing is fair. In the US and in the UK, we think we're pricing in a bit too much.
And so, sticking with monetary policy, central banks, what are you essentially looking forward to in the meeting later today? The Fed is widely expected to hold, but everyone's eyes are sort of turning elsewhere. What is your expectation?
Sure. I think he will, in his first meeting, the goal is to not rock the boat, right? So he wants to deliver more likely a balanced statement. At the last meeting, there was already some dissent towards removing the easing bias. Likely that easing bias will be taken out. He will have to give a nod to the worsening inflation picture since the last meeting, the better employment data. Although in the press conference, I think he will also give a nod to the U.S.-Iran deal and how that bodes positively for inflation going forward. In terms of forward guidance, he's been a critic of that in the past. He thinks the Fed maybe gives off too much information, and that can cause confusion sometimes. So potentially he may not contribute a dot to the dot plot. And that also gives another rationale for not having a bias either way, tightening or easing. So for various reasons, we think they will have a neutral bias, which I think makes sense for them to be in a wait-and-see mode, wait to see the impacts of this deal, if it holds, if oil continues its downward trajectory and its Strait of Hormuz opens properly. So it makes sense to wait and see, and I think that will be the main driving message.
And when it comes to the U.S. dollar, you're long-term negative on it. Why is that?
For various reasons. So I think, in terms of the interest rate differentials, we think there's too much priced in. So we think that should continue to come down. We think that the fiscal dynamics in the U.S. are quite negative long-term, and that should continue to weigh on the dollar. And we think that some of the policy uncertainty that we have seen in this administration, those are negative for the dollar as we see tariffs coming back into the news again now. So these are all aspects of the dollar that are negative. And then we do see a broader positive risk sentiment, which should lift particularly emerging markets. So our dollar bias, short bias, is a lot more towards EM, somewhat towards DM, but we think EM FX can really benefit in a global growth environment with risk sentiment doing well.
All right. right, Amar, thank you for those insights. Amar Bashir, fixed income head at Wealthbrix Capital Partners. Now up next, Brent oil fell at its lowest level in more than 3 months as the US-Iran deal raises hopes the Strait of Hormuz will open soon. More on that story next. This is Bloomberg. Brent crude has fallen below $80 a barrel for the first time in more than 3 months on the hope the U.S. and Iran deal will reopen the Strait of Hormuz. Bloomberg's Stephen Stipczynski, who leads our Asia energy coverage, joins me now. Stephen, good to have you on. The Strait of Hormuz, yet again, we talk about it almost every day at this point. Let's go back to the reality of the situation, how easy it will actually be to get shipments through the Strait of Hormuz once it opens, as President Trump says on Friday.
Yeah, I mean, there does seem to be a bit of a gap between what Trump is saying, which is that it will be open and clear and everything will be back to normal on Friday, versus the actual reality of the matter, which is it will take a bit of time for it to get back to pre-war levels, if you know, whether it's even going to happen in the near term. Now, I think you look at the specifics of the MOU between the U.S. and Iran that was signed, or will be signed this week. The text Bloomberg has reported, it does say that you know, Iran has to push forward with allowing merchant ships and traffic to resume back to normal levels in 30 days after that is signed. So even the MOU doesn't say that there will be an immediate opening and the floodgates are there and everything will go through. It will take time. There are a few things on the minds of ship owners, captains, crews, and the oil and gas exporters in the region. One, of course, will be the level that the mines have been removed. Trump has indicated that they're removing mines. Those efforts should be finished by the end of the week, according to the president. Also, which shipping lanes will they take? Which you know, are they going through Iranian waters, Omani waters? According to the MOU, there will be no toll during this period. But will there be a toll afterwards? Iranian local media has reported that there will be some sort of payment system in place after the 60-day agreement is up. That's to be, you know, that's something to be discussed, obviously, between the U.S. and Iran in their ongoing negotiations. And then, lastly, of course, is, you know, are there ships even in the region to go through the Strait? There are a lot of ships within the Strait of Hormuz that want to get out. But how many ships are being brought back to the region to maintain the flow of oil and gas?
And Stephen, just talking about the name price of Brent crude, it is below $80 a barrel right now. Do you think markets are reacting to the news that we have yet to see finalized too enthusiastically? I mean, I'm seeing a lot of analysts paring down their average Brent expectations for the remainder of the year. Do you think that's yet another question? Is that a realistic sort of projection for Brent prices?
You know, this is an endless debate on social media, and it's been really interesting to see this unfold because the fact of the matter is the Strait of Hormuz does remain shut right now. And over the last 2 or 3 months, we have seen an on-again, off-again sort of agreements between the U.S. and Iran. That being said, according to the analysts and the traders, this one does feel markedly different. It does feel that the U.S. is giving in to some of the requests by Iran, and Iran will be allowing for freer trade to navigate and go through. It is sentiment-driven, no doubt. There's really no change to the fundamentals when we look at this. And so I think that's how the market views it. Whether or not it's viewed correctly, you know, I guess only time will tell as this unfolds.
All right. Stephen Stipczynski, who leads our Asia energy coverage. Thank you. Now, coming up, Sudan's army is curbing purchases of Iranian weapons as the country looks to win U.S. support to end a civil war. We'll discuss that next. This is Bloomberg. Sudan's army is curbing purchases of Iranian weapons as the North African nation strives to win American support to end a 3-year civil war. Bloomberg has learned that Sudan's military conveyed the message to Washington, wanting to prove it is a reliable partner for peace. For more, we're joined by Bloomberg's Simon Marks to discuss the details. Simon, good to have you on. Look, how significant is Sudan's pivot away from Iran, and will the U.S. view these moves as credible?
Well, I think it definitely marks a shift in the army's allegiances. They did reestablish ties with Iran in a couple of years ago, just during this war in 2023. But I don't think it's really going to, convince the U.S. straight away. The U.S. State Department has told us that they're aware of ongoing Islamist elements within the army, within factions of the army, namely the Al-Bara bin Malik Brigade, which is not strictly the Sudanese army, but is aligned and has sworn allegiance to the army. So I think this is really messaging from the leadership within Sudan's army that it is stepping back from Iran. This is due to, obviously, a desire to, have better relations with the US, but also pressure from countries like Saudi Arabia, I think, which is keen to see Sudan peel itself back from being too close with Iran. And that's certainly an image that's not really helping it, because its opponent in this war, the Rapid Support Forces, is very keen to portray the army as hardlined, Islamist, and unable to rule the country.
All right. Simon Marks with the details on that story. Now, before we head into the break, let's take a quick look at what markets are doing. Equity futures in the United States dipping a little bit higher this morning. Oil prices dipping lower, and treasuries are rallying before the Fed meeting taking place later today. And now, coming up, as the race for critical minerals and energy resources intensifies, Namibia is becoming an increasingly important partner for the U.S. We'll speak to Giordano, U.S. Ambassador to Namibia, next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal drafted. The U.S. and Iran prepared to sign an interim peace deal, which would see Iran scoring broad financial gains, including tapping a $300 billion development fund and eventually unlocking frozen assets. Oil holds near a 3-month low on expectations a U.S.-Iran deal to reopen the Strait of Hormuz will unleash a wave of supply. And Asian stocks under pressure as the chip rally on Wall Street pauses, and traders look ahead to Kevin Warsh's first meeting as Fed chair. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Amar in Dubai. We're focusing in on one thing today. SpaceX, 49% increase since its debut. We started at 135 in its IPO price. We're above 200 now. So SpaceX is now the 5th largest stock in the world. It has topped Amazon. Yesterday, during the trading day, it topped Microsoft briefly, but then ended the day being just the 5th largest stock in the world. Market cap is now at $2.65 trillion. That is about $8 billion above Amazon. But when we talk about SpaceX, we're still talking about a company that is not generating as much revenue as some of the mega cap peers. It has, in 2025, its revenues were at about $18.7 billion. That compares to a staggering $717 billion for Amazon. But the most staggering line in all of this is really about the owner himself, Elon Musk. A lead in our story suggested that Elon Musk, it took him 54 years to make his first $1 trillion, and then 2 trading days of SpaceX later, he's already nearly a third of the way to his next trillion. That is, we're talking about $2 trillion. And so staggering numbers there, and with the whole SpaceX IPO earlier in the week. Now let's move on to how markets in Asia this morning are doing. And we have Avril Hogg in our Singapore studio. Avril?
Yeah, Abir, we're seeing Asia stocks looking quite flat today and snapping that 3-session winning streak, but the declines are not as bad in the region compared to what we saw in the chip stocks in the U.S., with the stocks falling about 6%. Overall, it's the calming of fears, given oil at these levels, of the rate hikes from regional central banks. Of course, you're actually seeing the Nikkei today managing to add from what was yesterday already a fresh record high as the BOJ event passed without incident. You're focusing also on some of these Chinese assets as we keep tabs on them with a high-profile financial policymaker meeting underway in Shanghai. And so far, we've gotten announcements that would help the internationalization of the renminbi, and also some signals that suggest that there could be a streamlining of the interest rate framework for China. Aside from that, dollar China is looking really flat. You get the sense that investors are focusing on the dollar side of the equation ahead of the Fed. Abir?
Avril, thank you for those details. Now, as competition for critical minerals and energy resources intensifies, Namibia is being viewed as an increasingly important partner for the United States. From uranium and offshore oil to the growing energy demands of the AI economy, Washington sees significant opportunities for deeper engagement with the country. Joining us now is our Chief Africa Correspondent, Jennifer Zapasaja.
Thanks so much, Abir. Yes, joining us now is United States Ambassador to Namibia. That is John Giordano. He's joining us in Cape Town. Ambassador, thanks so much for joining us. I know you're in town for Africa Energy Forum. Let's just start there, because Abir was just pointing out Namibia is a major source for energy. Let's just talk about the proposal that the U.S. is putting out there for Namibia. Namibia has a number of international partners, from China to a number of other countries. What is the U.S. positioning in terms of what is the offering that the U.S. is giving to Namibia at this point in time in terms of energy partnerships?
Thank you so much for having me, and it's great to be here in Cape Town and great to be here at the Africa Energy Forum. The United States, as you know, is very much focused on securing the critical minerals around the world and securing partnerships with rule of law countries, stable political environments, and countries such as Namibia that have a focus on transparency and invite U.S. private investment. As you know, capital follows trust, and countries such as Namibia is a country that investors can trust, that they put their investment in, that it's going to be worthwhile and secure. As you see, the United States has mobilized over the last 6 months, in fact, over $30 billion through DFC, Exim Bank, USTDA, to secure critical minerals around the world, de-risk and accelerate projects. In Namibia, as you know, it's the 3rd largest uranium producer in the world. And with AI, the hyperscale data centers that are going to be needed to power AI, we're going to need uranium to fuel the nuclear power that's going to fuel the hyperscale data centers that it's going to power the AI, and as well as the advanced manufacturing. So what we offer Namibia is advanced technology, engineering, an adherence to strict environmental and labor codes as we have in the United States, and that U.S. companies will adhere to when they operate abroad. But we also offer benefication. We also offer the hiring of local staff and transferring technology to them in order to grow the employment base here.
So, Ambassador, does that mean, you said capital follows trust? Should we expect an expanding partnership then, and investment from the U.S. into Namibia? What does that look like in the near term?
Yes, and United States companies are on the ground. They're exploring the various opportunities that exist across the critical minerals sector, particularly with regard to uranium, and trumpeting, their findings. Again, that Namibia is the type of country it is and has the resources that it does to investors. So we should expect further investment in Namibia.
We've talked, Ambassador, about the U.S. and Iran deal. Do you see that potentially trickling down to a country like Namibia, and in what ways could that take shape? Right.
When it comes to the U.S.-Iran deal and what's going on in that part of the world, the president has made very clear his objectives in this operation. So I would refer you to his many comments on the issue.
So then, Ambassador, let's just talk then about the overall strategy by the administration for Africa, because you are one of just a handful of ambassadors that have actually been appointed to the African continent. What can we take from your appointment and the other appointments about the strategy by the Trump administration for the African continent?
Yes, the focus has been recalibrated, and for lack of a better term, there's been a refocus on the opportunities across the entire continent, not just Namibia, and with particular focus on the Southern African energy corridor there. The administration is looking to rule of law partners such as Namibia to partner with us on critical minerals, on supply chains. Namibia is not such a resource story as much as it is a connectivity story. And what you have in Namibia is you have a country that's looking very much toward not only what they have in the ground, but how they're going to move that. And it's about, you can have all the resources in the world, but if you don't have the systems in place to move those resources. I mean, that's how the United States became the superpower that it is today, is that we were able to move our resources, move them to market. And Namibia is doing just that, and they're building above ground. And that's really what the compelling story is in Namibia, is that you have the port at Walvis Bay, you've got the corridor there, you've got some of the best roads in Africa, upon which these minerals can then move out to port and move out to market. And that's of great interest to the United States as we begin to look around the world where we can find reliable partners, reliable supply chains, and these critical minerals, particularly uranium.
And you said rule of law partners. We'll leave it there with you. John Giordano, United States Ambassador to Namibia, joining us there in Cape Town. Thanks so much, Ambassador. Abir?
Jennifer, thank you for that conversation. It was Jennifer Zapasadra, our chief Africa correspondent in Johannesburg. Now, coming up, President Trump expresses frustration with Israel's military campaign in Lebanon. We'll discuss the U.S. president's relationship with Netanyahu, the fight against Hezbollah, and the U.S.-Iran deal with Mark Regev, former Israeli ambassador to the U.K. next. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, President Trump has vented his frustration with Israel's military campaign in Lebanon, going as far as suggesting that Syria would do a better job fighting Hezbollah. During a meeting at the G7 summit, Trump said Israeli action against the Iran-backed militant group had nearly derailed peace negotiations with Tehran.
And I suggested to Israel to let Syria take care of Hezbollah. Because to be honest with you, I think they do a better job of doing it.
Are you frustrated with Netanyahu, sir?
I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon. And too many people are being killed. And you don't have to knock down an apartment house every time you're looking for somebody, because there are a lot of people in those apartment houses, and they're not all Hezbollah, that I can tell you.
Joining me now is Mark Regev, former Israeli ambassador to the UK and former senior advisor to Benjamin Netanyahu. Ambassador, you heard what President Trump was just saying about Israeli actions in Lebanon, but also the details of the MOU that have emerged overnight, essentially. What do you think the perception of all of this is in Israel?
I think we understand in Israel, as I think the people of Lebanon understand, is that something has to be done about Hezbollah. That you can't allow Hezbollah continue to be the power behind the scenes in Lebanon, dominating the policies of that country, inflicting war on Lebanon that the Lebanese people, the Lebanese government, the Lebanese state didn't want. And so it's crucial, I think, that Israel stay in southern Lebanon for the time being, cleaning out the Hezbollah infrastructure. I think it's crucial that the Lebanese government continue to demand that Hezbollah actually disarm. I think that'd be good for Lebanon. That'd be good for all of Israel, all of Lebanon's neighbors, including Israel. And first and foremost, it'd be good for the Lebanese people who deserve better.
Right, but Ambassador, Lebanon emerged as a sticking point for Iran, but also in the negotiations between Iran and the U.S. President Trump himself said that, Israel's actions in Lebanon, he did not favor those. Lebanon is an explicit part of the MOU that we've seen overnight. So how does that sort of balance out with Israel as the third party in this war against Iran, and the final deal coming to fruition?
Well, your question involves so many issues, but I'll focus on Lebanon with your permission. And I'd say Lebanon has become a failed state. Yes, Beirut used to be called the Paris of the Middle East, and now it's a failed state. And it's a failed state because of Hezbollah and Iran's occupation of Lebanon through Hezbollah. Now, Lebanon should be independent again. Lebanon should be free again. Lebanon should no longer be a failed state. They should be a successful country. And getting rid of Hezbollah's military control of Lebanon, of this proxy occupation by Iran, I think is crucial. It's in a Western interest, it's in an Arab interest, it's an Israeli interest, and first and foremost, as I said before, it's a Lebanese issue. Now, can Israel and the United States have disagreements on different issues? Of course we can. I think that's, in any relationship, you can have disagreements. There are, two different countries, two different perspectives. But are we allied? That we want to see a better future for Lebanon? That we want to see peace between Israel and Lebanon? Of course we're allied on the strategic issues.
Okay, so internally in Israel, so many parties across the political factions are calling this deal a disaster. How does it tie up with Prime Minister Netanyahu politically and his political standing with upcoming elections?
So it's probably too early to say how this will affect the Israeli elections. We're looking apparently at elections sometime in the second half of October. So there's still a few months away. But there is a bad feeling in Israel about the deal, and I'll give you my perspective, that if there was a hope to get a good deal with the Iranians on the nuclear issue, which is the most important issue, to prevent the Islamic Republic of getting a nuclear weapon. So the president was very clear. He said over and over again, they have to remove from Iran the already highly enriched uranium, and they have to dismantle their ability to further enrich. Now, the Iranians have never wanted to make those concessions. They want to keep their military nuclear option there. They want to continue on a path to a nuclear weapon. And I would argue that the only way you're going to get the Iranians to compromise on these issues that are so important, not just for Israel, but for the region, for Iran's Arab neighbors, and for the entire world, is to keep the pressure on Iran. And I would hope that the president will stick to what he said a number of times, that there'll be no economic compensation for Iran until they actually deliver not on the basis of promises, but there will only be economic compensation for them, whether it's sanctions relief or freezing frozen funds. Those sort of things will only happen when Iran actually delivers what it has promised or committed to deliver. In other words, not on the basis of some amorphous problem. I think it's also crucial that the Americans keep military forces in the region poised to attack if need be, because without that sort of military pressure, the Iranians will never contemplate the sort of compromises that are necessary to get the deal that the president wants.
Okay. Well, Mark, Regev, former Israeli ambassador to the UK and former senior advisor to Benjamin Netanyahu. Thank you. Now, coming up, Ukraine on the agenda. We get the details of Trump's meeting with Zelensky at the G7 next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. The U.S. could soon reimpose sanctions on Russian oil shipments after President Donald Trump and fellow leaders at the G7 met to discuss the war in Ukraine. Overshadowed by the Iran war, the focus is shifting back to Ukraine.
We were focused on Iran. That's going to be in the back, in the rear view mirror. They go to this front and they get blown up. And Ukraine is losing a lot of people too. I mean, the whole thing is ridiculous. So, I'm going to do whatever I can.
For more, we're joined by Rosalind Matheson, our chief Asia correspondent. Ros, can you tell us more about what came out of the Group of Seven meeting?
Well, obviously, a big part of the G7 has been understanding that Iran deal and the parameters of it, which are due to be signed later this week, and European nations wanting to understand the next steps. But also, Donald Trump seemingly calling himself done on Iran and ready to move on. And you have G7 leaders, including the European leaders, saying, right, well, let's turn back to Ukraine and let's think about the next steps there to try and finally bring Russia's war in Ukraine to an end. And of course, Volodymyr Zelensky has been at the G7 to make that point, saying he wants some sort of fresh peace talks before the winter, when obviously things become particularly difficult for the people of Ukraine. And European leaders trying to reset the narrative a bit here with Donald Trump, who promised, of course, to end this war in Ukraine immediately after taking office and has failed to do so, and trying to present the idea Ukraine's not on the back foot here in this war. In fact, they've been striking Russia inside Russian territory. Russia is failing to make gains on the ground in Ukraine. Russia's economy is weak and has been weakened by this war, even if higher oil prices of late have benefited their coffers to some extent. So Ukraine doesn't have to cede necessarily a lot of territory and make other concessions in order to get a peace deal done, and perhaps get that framing into Donald Trump's mind versus how he's perceived it previously. So all laying the groundwork in their minds, in their hopes to get Donald Trump to refocus on Ukraine, but perhaps in a slightly different way.
There's something else happening as well today. AI executives are planning to attend the summit later today. What can we expect out of that?
Well, that's right. So AI is another issue that's on the table at this G7 meeting, and obviously a lot of conversation around the recent move by the US government to order Anthropic to disable access for its really high-level platforms to foreign users, which really can't mean any users at all. And you've got the EU wanting to study Mythos, for example, itself directly, and lots of countries there saying, well, hang on, you're going to cut off access to us, and what does this mean? And so what they're putting forward on the table at the G7 is this idea of trusted partners. So that's certain companies, potentially, certain companies, countries who might get access to these higher level models to study them and use them. And the argument they're making is, we want to understand what you mean by national security grounds. We're here to try and also ensure that we're not becoming too reliant on China. So what can we do to work together? And having those AI executives there today, including executives from Anthropic AI, Sam Altman, amongst those who will be joining, is a chance to get them to also press their case to the US administration. So using these companies to perhaps to try to lever open some access with Donald Trump and his administration. So that's going to be a key part of the conversations today, is what is the access going to be going forward for these countries?
All right. Well, Roz Matheson, our chief Asia correspondent, with the latest on G7. Now, before we head towards the end of our show, let's take a quick look at where markets are this morning. S&P futures edging higher by the minute, 0.3 higher as of now. NASDAQ 100 futures 0.6 higher. Now, the NASDAQ did drop yesterday after a pause in the semiconductor and tech game. Dow Jones futures sideways, well, 0.1% higher as of now. And Euro Stoxx 50 futures are dropping slightly. Oil is dropping this morning. We still await that deal on Friday to be signed, the interim deal between the U.S. and Iran. So we're seeing Brent crude prices 0.7% lower and NY crude 0.8 lower. Now that is it for Horizon's Middle East and Africa. I'm Abir Abu Omar in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.